Hello, this is Simon Klein from TradeSmart on the 26th of May 2016 at 8:24 a.m. Eastern Time. What I'd like to do now is to show you a live trade I'm in. I'm actually on the long side of the Australian dollar buying this daily demand zone. Now, if we look also on the weekly chart, it's also a weekly demand zone. And if we look on the monthly chart, we actually made a higher high here. And I'm expecting and anticipating a higher low to be made and potentially a move higher. So this may be a great zone for a swing trade with the potential, quite a large profit to be made if it continues to go. Now, why is it an anticipatory trade? Because if we look at the daily chart, we're still in a daily downtrend, but just watch how we kind of are tapering out over here at the end, and it looks like we're going to move to the upside. So this is what I expect to happen. This is what I'm playing for. I'm playing on the long side here with an expectation to move up. If this starts to happen, I'm going to start adding to my position, okay, and try and maximize the winning trade. If it doesn't work now, I'll take a stop. So let me show you the actual live trade. Actually took it on a different platform. You can see the entry here. Let me just change it to the Australian dollar, and you can see the entry on the 1 hour chart was over here. Okay, so we were in profit over here. We're pulling back again, and I'm expecting another move to the upside if this is what happens. If it does, that's great, and if it doesn't, I have a stop in place. If it pulls back, that's fine as well. It can pull back and then go higher. So we'll have to wait and see what happens. So maybe I'll do another video afterwards and show you exactly how the trade played out. Anyway, that's all for now. This is Simon Klein from TradeSmart. Good luck with your trading. Hello, this is Simon Klein from TradeSmart at 9:07 Eastern Time for part 2 of the video that we started earlier on the long trade of the Australian dollar. We were actually around this area at the time, and we were expecting another move to the upside in line with what we thought the market was likely to do based on this scenario it's currently in. And this is exactly what happened. Now, I want to mention a very, very important point that beginning traders sometimes have an incredible difficulty with. It's called the pullback. Now, what does that mean? You may enter a trade here, which is what I did, and it goes up in profit, and it starts to come down against you, and you see, if you're watching your P&L, your profit and loss, you start to see a profit diminish and get smaller and smaller. And what happens to a lot of beginning traders is at some point they just pull the trigger and get out of the trade for a very little win, or maybe a break even, or a small loss, because they believe, based on their emotions primarily, that the market's going to keep going down and they're going to end up losing even bigger. Now, we have a protective stop in place down here. If the market were to go down here, it means that our original trade idea is not valid anymore and we want to get out. So we need to place our stop in place and not be afraid of the pullback, because almost no trade goes directly from entry to target without going against the direction of the trade that you want it to go in. It's not going to go direct in a straight line. I mean, sometimes it does, but most of the time it's going to go down against you as, the supply-demand equation changes. Anyway, that's all for now. This is Simon Klein from TradeSmart, and good luck with your trading.